Hi everyone, this is group number 28. Today we are going to present a group presentation on ASIC's audit inspection report for 1st July 2019 to 30 June 2020. The presenter for this group presentation are Deepu, Jining, and myself. The content of today's presentation are categorized into three sections. The first section is about what is audit evidence, why it is important, and audit evidence in relation to ASIC's case study. This will be presented by Deepu. The second part is about what is the impact of case study with respect to the veracity of audit practice. And I'm going to present on this. And the final part, Jining will wrap up with some thoughtful advice to both practicing auditor and information user based on the ASIC's finding. Deepu, can you start, please?
Thank you, Tasi, for the introduction. Now, let me talk about evidence. That's from the first part. Let us first understand what evidence is. Let us assume that you are a lawyer, and let us also assume that you are presenting your client in front of the judge because you and your client are claiming that he hasn't committed a fallacy or, let's say, a crime. You told the judge that your client is innocent and wants justice. The judge replies that you, being a lawyer, need to present some proof or verification to confirm that he didn't do the crime. Here, the proof or the exhibit, that's any kind of document or proof that you present to the judge, is the evidence. Evidence is any kind of proof that acts against or for a judgment. What is audit evidence? In auditing, the work of an auditor is to give opinions on the financial statements, whether they are showing true and fair view or not. Audit evidence is the information that an auditor uses when arriving at their opinion on the truth and fairness of their client's financial report. They try to find if the financial statements are free from financial misstatements. So similar to a judge, an auditor has to give his or her opinion with respect to evidences collected from the financial statements and documents. The audit evidence must be sufficient, which means as much or sufficient in quantity as well as appropriate, which means of best quality, and would also be gathered by the auditor from other information. How audit evidence are gathered. Audit evidences are gathered through inspection, observation, documentation, analytical procedures, performance recalculation, and inquiry. Audit evidences can be categorized mainly into two parts. Those are quality and quantity. We can also replace those two words with appropriateness and sufficiency. The quality of evidence and quantity of evidence are very important for a business and for the entity as a whole to show other outer and inward personals how the business is running and to make further decisions. So what is quality? The core meaning of evidence collected and its importance is the quality and the amount of evidence collected, where in most cases more is better. That's the quantity of evidence. Why is audit evidence important? The stakeholders and managers of a company and organizations heavily rely on the conclusions of an auditor because every other decisions and actions are based upon his or her conclusion, especially important decisions like investment. On the other hand, audit evidence is also important for an auditor for gaining trust in the organization and building up his or her experience and career. ASIC's audit inspection report on audit evidence. The report that we have read shows that Australian Securities and Investment Commission ASIC audit inspection report, and it highlights that 20% of 179 key audit area were they reviewed on a risk basis across 53 audit files of audit firm for the period January 1, 2019 to 30th of June 2020, and found that auditors have failed to obtain reasonable assurance that the financial reports were free from material misstatement. So no sufficient audit evidence to support auditors' opinion on financial report was found. Thank you, everyone. And now I would like to pass the other question to Tasi.
Thank you, Deepu. Now, the third question is, what is the impact of case study with respect to the veracity of audit practice? So as my friend Depu has mentioned, the ASIC audit inspection report highlights that auditor has significantly failed to obtain reasonable assurance that the financial report as a whole was free of material misstatement. As you can see from this graph, the percentage of key audit area where auditor failed to obtain sufficient audit evidence to support their opinion, and the percentage is significantly very high, and it is consistently increasing every year according to ASIC's report. So from ordinary's individual point of view, after looking at this graph, such a high percentage of adverse finding by ASIC and consistent increase every year indicates that the veracity of audit practice by audit firm in Australia were compromised. The impact of deficiency in veracity of audit practice would be on many stakeholders. However, I'm going to highlight only the three major stakeholders. Those are investor, company, and the capital market. The first one is for investor. Deficiency in veracity of audit practice will lead to negative effect on investor perception towards audit quality, and this will weaken their confidence towards reliability of financial statement. And consequently, this will detrimental the impact on economic decision of investor, and potential investor will not make their investment in the company. And the second impact would be on the company has a high risk of corporate collapse due to poor quality of financial disclosure. The best example would be Enron and WorldCom. And the impact on the capital market would be because of the poor audit quality, which will weaken the capital market. As many study confirms that the investment decision made by the investor and other participants in capital market are significantly influenced by audit quality. However, the obvious question arises to everybody's mind would be why there are adverse findings in audit file consistently despite ASIC's review and recommendation every year. So let's dig in. Well, if you look at this graph, which illustrates the adverse finding in key audit area, the highest number of adverse findings will continue to be in audit area such as impairment, assets valuation, and revenue receivables. The potential reasons for adverse finding in those two areas are valuation of financial assets and revenue recognition are challenging and complex area. Regarding the impairment and asset valuation, in journal article titled Extreme Estimation Uncertainty in Fair Value Estimates, the author stressed that auditing fair value measurement has become a challenging task for auditor because of high degree of subjectivity and extreme measurement uncertainty associated with fair value measurement of the asset. Similarly, other research has evidently found that the audit expert interprets standards and assess audit evidence differently than inspector, and therefore this leads to a gap between what auditor and inspector regard as sufficient and appropriate audit evidence to support their opinion, particularly in respect of fair value measurement. Well, in respect of the revenue recognition, since the implementation of single standard for revenue recognition, that is IFRS 15, revenue recognition has become complex because of the length and scope of the standard. In addition, there is no uniform materiality threshold in IFRS 15, which means that the decision about whether certain information is material is highly subjective. So based on this potential reason behind the adverse finding by ASIC and considering the ASIC's case study report, the veracity of audit practice by audit firm in Australia cannot be achieved because of the existence of expectation gap. So that's the end of my part. And now my friend Jinying will wrap up with some thoughtful advice to both information user and practicing auditor. Thank you.
Hello everyone, I'm Jane. Today I'm going to talk about the question 4 and the question 5. Let's start the question 4 first. What would your advice to be auditor information users based on this finding? First, we divide the users into two parts. They are internal users and external users. For the internal users, like the owner, manager, and employees, they are responsible for the financial reports. So they need to make sure that the internal corporate governance and the risk farm work are robust, and that they assist the preparation of financial reports, which are free from the material misstatement. Quality audits supports financial reporting quality and the market confidence in a company through reported financial position and results. In order to achieve the purpose, the internal user needed to support the auditors by first, establish the adequate process and the record to back up the financial reports information. Second, use the relevant experience and expertise to provide high-quality financial data and reports, as well as accurate analysis and documentation in a timely manner for the auditor. Only by doing so, they will be able to obey the accurate conclusion, which will help the companies to monitor and reduce the business risk. Meanwhile, they can promote the improvement of business management and the economic efficiency in the future. Next, let's talk about the external users. Those people are outside of the business entity who use information like the suppliers, banks, and investors. The main purpose of external users to use auditing and the financial information is to decide whether to conduct the business activity in these companies. The financial reports will help them understanding the company's situations and affect their decision making. However, these unfavorable discoveries in auditor reports will reduce trust and the confidence for these companies. Normally, investors rely on the auditor processing to verify the reliability of these statements. But this table shows a key area of the auditor with adverse finding. There are several cases on investment and the revenue aspect. So investors, especially the potential investors, need to be more cautious in deciding whether they should invest. And also the same thing still happen to the lender. The assets valuation and the payable error will provide the wrong information to them, which will lead to the wrong estimation of loan amounts and the repayment ability. They also need to ask for further detail and reconsider they will give the loan to this company or the company have ability to pay the debts. In generally, the external users need to treat the auditor information more careful to ensure their funds are not lost. Now let's move to the next question. What would your advice be to practicing auditors based on this finding? According to this report's finding, it gives several advices to auditor to improve their skills. The report points that the auditor did not obey the reasonable assurance that the financial report was free of the material misstatements. In fact, the auditor must plan and perform auditor procedure to obey the sufficiency appropriate auditor evidence to provide a reasonable basis for the opinions. Otherwise, it may lose the markets and investors' confidence and informed. Second, the auditors must document their works in such a way that, that an experienced auditor can understand it and the foundation for the conclusion made. Documentation also helps the auditors in carrying out their duty, challenging judgments, supervising, reviewing their work, and achieving at the conclusions. And the same also where an auditor's entity net assets and earning have been changed immaterially, the auditor must conduct a root cause analysis to discover the roots of the problem, then to fix, compensate, and learn from the underlying issue. The last is the advice, the reporter already point out the shortage of the auditor in the key auditor area. Auditors need to spend more time and attention to understand the company's operation and systems. Also need to obey the entity's impairment calculation and conduct the reliable tests after obeying the effective information to ensure that they can get the accurate data. In addition, the auditors also need to improve their professional knowledge and experience and don't rely on the capability of the experts. Thank you. That's all content, and thank you.